Are you tired of getting it wrong? Where you're buying high and selling low? Well, we are covering a 9-part series on how to stack the odds in your favor so you can maximize the probability of you winning this game of crypto tennis. And I got a key bonus for you on how you can project what's likely to occur in advance of price targets based on human psychology, buying and selling behavior. My name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. If you're brand new to the channel, subscribe, hit the bell notification, because we do daily content to help you increase your financial health through simple crypto and blockchain education. So today we're really going to summarize what we've covered in the last 6 parts, because today is part 7. But I'm also going to give you a bonus on how you can project in advance what's likely to occur before it occurs. And more often than not, these price ratios are hit. It's almost like magic because we're measuring human psychology. All right, let's get started. So we are using Solana in this 9-part series. And what we're covering today is really the summary. So the first thing that we covered was momentum. We jumped into a weekly chart and we said the weekly momentum is oversold, which means the downside movement should be limited, which is this downside movement over here should be limited. And we should anticipate a potential trend reversal. But that in itself is not enough. So the second thing that we combined in part 1 of this 9-part series was this bullish daily reversal where the blue line goes over the red. That tells us the rhythm of the market is hitting a low and we should expect a reversal. But 2 degrees of time frame is great on momentum, but it's not enough. So then in part 2, we did 2 degrees of wave count. Waves, you get what are waves? Well, the markets tend to move in 5s and 3s. 5 waves followed by a 3 wave. 5 waves followed by a 3 wave. And what we said was, this market looks like a 1, 2, 3, 4, 5, and then an A, B, C. 5 and a 3. But also what we covered is when you have a wave count, there's normally a degree of count above and then a degree of count below. So the degree of count above a 1, 2, 3, 4, 5 is of a wave 1. The degree of count on the way down of an A, B, C is of a wave 2. That was part 2. Part 3, we said, can we get better? Can we make it even more narrow? We said yes. We said when we zoom in and we look at a wave C, this wave C is typically break down into a 1, 2, 3, 4, 5. So that gave us a massive probability. So now we've got 2 degrees of momentum and 3 degrees of Elliott wave count. That gives you a massive edge on the market because most people have no idea that the market is driven by the 2 human emotions of fear and greed. Then we said, well, can we do even better? I said, absolutely. We can measure this psychology using something called Fibonacci ratios. And if you know the wave structure, there's typical, most common, highly probable Fibonacci retracement zones, external retracement zones, and alternate price projection zones. You know, what are you going on about, Jagir? Well, wave 1 and wave 2 as a ratio has a relationship. And the most common is this one here. We drew this and we covered it in, I believe it was part 3, which was the 62% retracement, which was how much it comes down. Then we did an external retracement where we measured wave B, and that has a relationship to wave C. And we did something called an external retracement, which was this one over here, 1.272. And that has a cluster. That gives us a good probability. And then we said in part 4, can we get even better? We said absolutely. Because most people don't realize that wave A, with my high pitch over there, wave A, has a relationship to wave C, or vice versa. Wave C has a relationship to wave A. And the key ratio is 62%, which was this line down here. This one over here was the 62%, which was tagged perfectly. So now we've got momentum, pattern on 3 degrees, and now Fibonacci ratios on the retracement, external retracement, and alternate price projection, also known as Fib-based trend extension. But then we said, yeah, but can we get better, Jagir? Can we get even more precise? Can we stack the odds even more in our favor? I go, yes, if you're willing to do the work. Well, most people don't realize is wave C's tend to break down to 1, 2, 3, 4, 5, as we discussed. But wave 1 to 3 has a relationship to wave 5. And that's what this red line and this green line is. That's that zone, wave 5 zone. And we drew this box. And we said that is looking now very good. We've got momentum, pattern on 3 degrees, and multiple Fibonacci key ratios that are pulling together, that are saying this looks like a wave 2 low is looking like it's likely to hold and will act as a launch pad to this potential wave 3 takeoff. And we want to ride a wave 3. Wave 3 tends to be the most impulsive, explosive price action, is where there's the most optimism in the market, especially if the new high is broken. If this all-time high is broken, as in the price exceeds it, that gives the market immense confidence. Just from, people are going to do what other people are doing, which is buying and buying and buying. And we saw this beautiful price surge. So what we said we'll cover, which is part 7 today, as a bonus, is what are the typical wave 3 price zones? Wave 3 price zones, and how can we identify them in advance? Because you want to sell potentially at the end of a wave 3. All right, so now that we're happy that we've identified the end of a high probability wave 2, and we now understand that more often than not, wave 2s hold, as in once the price takes off, the price should not exceed this low, and this acts as a launch pad for a rocket, which is wave 3. We are going to cover, and I did this in advance last year in June, July, last year, 2021, and this is how we did it. And this is why we were so confident with Solana. Despite the news, by the way, despite the fundamentals, we're just measuring human psychology of buying and selling behavior. We're going to use something again called trend-based fib extension in this software called TradingView. And what we're going to do is we're going to measure this wave 1 by doing a click down here. We're going to do a second click up here. So we're going to measure wave 1. And then we're going to do a third click at the end of the wave 2. And we're going to get a projection to the upside of some typical ratios where a typical wave 3 occurs. And there's 2 ratios that I want you to be aware of. The most common wave 3 ratio is 1.618 of wave 1. In terms of, we're going to measure wave 1, multiply that by 1.618, and that's typically where a wave 3 will get as a minimum. But an overextended wave 3 gets to a 2.618 of wave 1. This will make sense in a second. I used to be a teacher. I used to teach secondary school kids mathematics, qualified teacher, up to A level, got a degree in mathematics, but you don't need degree level math for this. Simple multiplication. But TradingView has tools that you just go click, 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 and it does the math for you. But it's important to sometimes know the math. 2.618 is what we want of wave 1. There we go. All right, we got that here. So leave that over here. So let's just delete this. So we can do our first click. I'm going to do it to the right hand side so we can see this. So I'm going to click on, it's called, I always forget what it's called. I'm used to calling it alternate price projection, but it's called trend-based fib extension. So I'm going to do it on the right hand side. I'm going to make sure it's at the low of the wave 1, the high of the wave 1, and then the low of what we're calling the potential wave 2 reversal, and we'll do it over here. And you can see we've got these 2 lines, but these are not the relevant lines. We're going to get rid of those because they're from what we used previously. The 2 key ratios, what are they? Yep, you got it. 1.618 and 2.618. And if you need on TradingView, if they're not there automatically, you can actually change these manually. But there you have it. We have those 2 ratios. But you might be thinking, well, there's only 1 line. Where's the other line? Well, it's literally off the charts. So we're just going to zoom in like this. Now what we have is a very objective, clean, clear-cut target for a wave 3. 1.618 as a minimum. We're talking about $25 to $108, and then an overextension of $160. So shall we see how Solana performed? I think we should. And we'll keep the momentum in on this as well. I'll just move it like this. We'll just keep a track of the momentum because the momentum gives us valuable information. I'm just going to do it like this and bring it back in so we can see it. And then we'll do it like so. All right, let's see how Solana did. All right, so we've got momentum on weekly, momentum on daily. We've got the bullish reversal. We've got pattern on 3 degrees, a wave 5 of a wave C of a wave 2. We've got multiple Fibonacci ratios. Now we've done a projection in advance. This will be your buying zone. You have to have your own plan, your own risk management. You know, it's only probabilities, never certainties. So we're stacking the odds in our favor. But now we're going to unfold the price data. Now, Solana, I mean, it really took off. Like, it took off like you wouldn't believe. But as anticipated, because what we were anticipating was all-time new highs. So the price, we were anticipating this over here. Let's do it like this, actually. I'm going to do it like this, just so we can see, because it's cleaner and clearer to see in advance, that we anticipated these two price zones for Solana. Let's do the first price zone. Let's do it like this. And we'll get rid of this. What we're looking for, by the way, is what I'm looking for is a 5-wave movement to the upside, which coincides with the end of a wave 3 target. If you have a 5-wave, almost exactly as we identified, the wave 2 low, we want to use the same principles, momentum, pattern, price, to project in advance the end of a wave 3. Because that's where you want to be potentially looking to take profits, unless you want to hold through a wave 4 and then look for the end of a wave 5. So let's see how it unfolds. All right, boom. Oh my Lord, look at that. Look at that optimism, right? You can see that's where it was still a bit uncertain. And then all of a sudden, boom, it took off. Like, it was almost vertical, right? Look at that, almost vertical. Beautiful price action, especially if you managed to take the action down here before it took off. And then we had a bit of a pullback, boom, bam, it hit the 1.618. However, it hasn't got a clear pullback in terms of or even a 5-wave sequence. But because it's hit this, there's a few different strategies that we want to look at. But what we're going to cover in the next training. So this was what I wanted to show you, right? The summary, pulling it all together. We projected these ratios in advance. Let's just see how it took off. Oh my Lord, look at this, look at this. Look at this, it really just exploded, right? Now that's what you call a wave 3. Look at that, look at that, look at that. Oh my Lord, look at this, look at this. It overextended, it even went higher. Now, because it went over the typical extended 2.618, we should be looking to take profits really close to the end now over here. When it overextended over here, is no longer sustainable, it's overvalued, and if I change it to a candlestick, what I would be looking at is literally trailing a stop loss and really getting my stop loss close to the market, and there's our first red bar, bang, and then boom. That would be where we would have taken profits. You know, very, very important. But look at that though. We identified this in advance. Like, come on. And we did this. This was live. I'm doing it in hindsight over here. But if you go back to my content in June, July last year in 2021, this is what we did. And this is how we did it. Step by step, method behind the madness. You know, no hype, just very simple momentum, pattern, price, logical, mechanical, non-emotional. But what we're going to cover in part 8 is what should be the anticipated wave 4 correction. So this is a clear wave 3. Yeah, let's just identify that. Let's label it as well now. We're looking like a potential wave 3 at the top. Let me just update that to wave 3. Put a question mark because it hasn't been confirmed. This wave 2 has been confirmed, so we can now remove the question mark. But what should be the anticipated pullback? How far should a wave 4 pull back before a potential wave 5 takes off? Well, that's what we're going to look at in part 8. In part 8 of this 9-part series, we're going to cover wave 4 pullbacks, because remember, markets moves in 5s and 3s. And if you want to learn more about Elliott Wave and Fibonacci, how to read the markets like a pro, the psychological mood of the buying and selling behavior based on human psychology of fear and greed, take my free Elliott Wave and Fibonacci Masterclass. Is in the link below, it's in the description box, and I cover everything for you on how you can combine everything to give you a massive edge on the market. All right, let's finish today on my last on a quote from my book. But before I do, I appreciate if you like today's content. It really shows your support for the channel, because we work hard as a team to really bring this valuable content in a timely fashion. I'll read this question. This is in my book, chapter 6. This is from Bruce Lee. From Bruce Lee, right? Wise man, right? A wise man can learn more from a foolish question than a fool can learn from a wise answer. Now, I guess what he's talking about over here is, you know, sometimes I gotta be careful of the level that I'm talking about because we're getting into some advanced stuff now. We've covered 7 parts to this series. 7 parts to this series. We're gonna go into part 8 and then part 9. But we're talking about momentum, pattern, price. And I'm always looking for the feedback and questions that come in. And when a question comes through, I go, okay, I need to reevaluate and make sure I'm making it clear. So now you're getting really the context of degrees of counts, multiple momentum, Fibonacci ratios. But the confluence is what's really powerful. It's not momentum by itself. It's not pattern by itself. It's not Fibonacci ratios by itself. Is all of them combined, which gives us a high probability setup of a beginning of a trend reversal. Like the end of a trend is the beginning of a new trend, and the end of a trend on the upside is the beginning of a new trend on the downside. And that's what we're looking to anticipate. So get ready for part 8, where we're going to cover the end of a wave 4 and end of a wave 4 is technically also the beginning of a wave 5. And we want to identify that in advance because that can be a very, very powerful bit of information that we can see in advance to set us up for success. All right, like, subscribe, hit the bell notification, take the free masterclass, and I'll see you very soon.